Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin, Mota.
Well, Yatin, it was supposed to be a day of rebound. It was supposed to be a day of reprieve after the kind of hammering that we saw yesterday. At least yesterday we held on to the 24,000 mark,
Correct.
but today we ended sub those levels, sub 24,000. We ended below that level. Second half, we saw the market coming in the throes of profit booking. The broader markets also succumbed to selling pressure. We had the breadth also turning negative. We were cruising along, in the first half of the day with advanced decline ratio firmly in favor of gainers. But in the second half, the texture completely changed. It reversed in favor of losers. In fact, the breadth was somewhere around 2:3, the NSE advanced decline ratio. Banks and autos, those two were the top laggards. In fact, the Nifty bank index, Yatin, came off quite a bit from the day's high. But top laggard, autos as well, a close second. The broader markets, of course, were moving in tandem with the benchmarks, but mid-caps were underperforming. I think 0.6% kind of a loss coming in on the mid-cap index. If you look at, some of the individual movers, Yatin, Britannia, JSW Steel, Tech Mahindra, LTI, Mindtree, HUL. So some of those FMCG names continue to see buying interest. Those were the gainers. On the flip side, life insurers, which have been seeing good action in the last 1 month or so, today came under profit booking. So if you look at the top Nifty laggards, you had HDFC Life, SBI Life. Those two were the top losers. Aside of that, banking behemoth, SBI, under pressure. M&M, Airtel, of course, after inline set of numbers, some bit of maybe profit taking here
Correct.
as well, but of course we'll be talking about that in greater details in just a bit. So Airtel also among the laggards, and so was M&M. Yatin, as a result of the crisis that's unfolding in Bangladesh, a lot of these stocks have been moving, either on the higher side or on the lower side. Take us through some of the names.
Yeah, so I think textile stocks were in focus, but clearly, if you look at the markets, we ended the days at the day's low, 400 points lower, and the advanced decline ratio clearly changing the swing to almost 1:2. Now, if you look at the gainers in trade, obviously the textile stocks, given the fact that there is unrest in Bangladesh and the exports of garments could get impacted, and probably it could have a positive impact on Indian exporters. We saw a lot of these, textile players move up in trade. So we had the likes of KPR Mills gaining by nearly 15%. Wellspun India, we had stocks like Gokaldas Exports, going up in trade. So probably, we're talking about China +1 now. It's Bangladesh +1 for the textile industry.
Absolutely.
When it comes to results reaction, Sirma SGS, that stock, melted in trade, almost 10% lower for that stock after weak set of numbers versus expectations. Marico also, after yesterday's strength, today we saw some profit taking, 6.5% lower for that stock. BEML, Power India, GRSC, all of these stocks also witnessing a profit taking, 5% lower for that one. But stocks, which hit a fresh 52-week high despite the market conditions. We had the likes of Patanjali, stock at 52-week high, up 5%. We had the likes of Himadri Chemicals, FSL, KPR Mills, Deepak Fertilizers, all of these stocks at fresh 52-week high. The market probably is not giving rewards to better results, but yes, few stock specific pockets of strength in the markets, so to speak.
That's true, Yatin. A few pockets of strength, but I think it's a sell on rise kind of scenario that we saw playing out today. Also, about Marico, just want to add that 12% of Marico's consolidated revenue comes from Bangladesh market, right? I think that's one reason why, although some of the FMCG names were doing well, Marico was losing somewhere around 4% or thereabouts. On that note, of course, since we are talking about the Bangladesh crisis and we are talking about textile stocks as well, since Yatin highlighted them, I want to talk about Gokaldas Exports in particular, right? This stock snapped out of a 5-day losing streak. Of course, textile stocks will be major beneficiaries of the kind of political unrest that has been unfolding in Bangladesh. Of course, we saw the ouster of Sheikh Hasina as well. But the textile sector of Bangladesh, which contributes a lion's share of its exports, is likely to be a victim of this turmoil, with international buyers actually shifting their focus to alternative markets like, you're saying Bangladesh +1. So India, of course, stands to benefit. This may give rise to export opportunities for our own, companies. According to World Trade Organization data, 9% of total global exports to US were from Bangladesh. And 21% of the total exports to European Union are also from Bangladesh. That's according to Euroshort data. 11% of apparel exports globally were from Bangladesh till about 2022. And China's share, I mean, that's another advantage for India. China's share in apparel exports is also on the decline. So that's where India stands to benefit from both ends, right? India will or probably stands to gain an additional business of somewhere around $300 to $400 million per month if 10 to 11% of Bangladesh's export is diverted to Indian hubs. And this unrest will also actually damage Bangladesh's reputation. Like till now, you had US and EU giving preference to Bangladesh, but that may stop going forward. In fact, if you talk about particularly about Gokaldas Exports, the company, the management had spoken to CNBC TV18 a couple of months ago. I think they had pointed out that they are aiming to double their revenue run rate over the next 3 to 5 years.
Correct.
So this is one way that their revenues could also go up here on. But if you talk about the total coverage, brokerage coverage on Gokaldas, 8 analysts who have covered the stock, who have coverage on the stock, all 8 of them have a buy rating on the stock. The shares have in fact doubled over the last 1 year. In fact, aside of Gokaldas Exports, all the other textile and apparel makers are also surging in trade, the likes of KPR, Arvind, SP Apparel. So yeah, this has come as an opportunity in disguise for Indian companies.
Correct. Obviously the textile stocks were in focus, and Bangladesh being a major exporter, any kind of disruption probably could be an opportunity for Indian companies. Premature to talk about it, but yes, till the time there is no interim government or there is unrest, probably that will be an advantage for a couple of quarters. But shifting gears and talking about Bharti Airtel, they came out with their quarterly earnings, and Macquarie has a neutral call on Bharti Airtel with a target of 1280. Now, there have been obviously talks that Singtel might sell stake in Bharti Airtel via block deals, and probably that overhang also had an role to play in today's weakness. But numbers were slightly below expectations. Slightly means 2-3% kind of a miss is what we saw on a consolidated basis. If you look at the India numbers, they were 12% higher on a year-on-year basis. However, the consolidated EBITDA was only 1% higher year-on-year. Obviously, the currency translation also has to play a part in it. But if you look at the Q1 consolidated profit, it is led by one-off exceptional items. In fact, the ARPU miss, according to Macquarie, leaves little room for re-rating of the stock, or probably immediate kind of upside in the shorter term. In fact, they say that over the next 1-2 years, they remain constructive on the telecom sector and the cash flows for Bharti Airtel, given the fact that there has been a good tariff hike, and probably brokerages are building in a tariff hike in FY26 as well. Probably 12 months from here on, there could be another tariff hike, according to Macquarie, and probably the India telecom sector is something that investors are focusing on at this point in time. Obviously, the management commentary was good. They're expecting gradual improvement in ARPU, but yes, the markets probably have factored in that price, and Bharti Airtel is one of the top performing Nifty stocks in the last 6 to 12 months.
That's true, Yatin. Needless to say, there has been a lot of action in the telecom space itself, right? With Vodafone India's FPO, then the entire telecom tariff hike happening, and of course, brokerages factoring in another one in FY26 as well. But also want to point out that Airtel's target of achieving 300 rupee on the ARPU side is something that the street, of course, will be watching out for. Although this quarter it has been 211 rupees. If I'm not mistaken. But yes, lots of action, and lots of analysts have also turned bullish on the entire telecom basket. But the other stock on my list today is V-Mart Retail, a fashionable day for this particular counter. It has clocked in a double-digit rally, good numbers. In fact, it has swung back to profit vis-a-vis the same quarter last year. Profit has come in at 12 crore rupees vis-a-vis a loss of 22 crore rupees in the same quarter last year. Revenues were up 16%, EBITDA 89% jump on a YY basis. Same store sales growth also grew somewhere around 11% or thereabouts, so double-digit growth coming in there as well. The first quarter was led by a growth in footfalls. Footfalls were up 36%, by the way. So that was also a good thing, and improving working capital is something that aided numbers for V-Mart Retail as well. The sales per square foot also rose in double digits, 13% on a YY basis, and its Lime Road business losses have been curtailed a bit. Reduced by 60% on a YY basis and 15% on a quarter-on-quarter basis. So on both on a YY basis and quarter-on-quarter basis, the losses on the Lime Road business have reduced. So that's a positive. The company is focused on its store expansion plan as well. It had opened 7 new stores during the quarter and closed 3 underperforming stores. Total number of stores pan India stands at 448, and if you look at the stock price, Yatin, it has rallied somewhere around 57% in the last 1 year.
Yeah.
And if you talk about the coverage on the stock, 18 analysts have coverage, out of which 12 of them have a buy rating. So, and upar se, and on top of that, rather, the talks of demand, improvement on the back of good monsoons is something that could bode well for V-Mart retail. And buying ahead of festive season, demand ahead of festive season is also something that will be watched out for, and perhaps on the back of that, coming quarters will be quite strong for V-Mart retail.
Absolutely, and the average billing is close to 1,000 rupees. So this store, represents the middle class ambition of India, because they have been really doing well in the middle bracket, and the focus really remains on store addition in the tier 2-3 cities, or probably states which are low per capita. They are adding stores, not in Mumbai, but probably somewhere in Indore, or somewhere in Telangana, or somewhere in Hyderabad. So that is how they are controlling their cost, and getting more footfalls in all of these states, wherein probably the middle class is more ambitious, or probably more fashionable. That is the story of V-Mart. They had a blip when it had an acquisition. They couldn't manage those assets well. But yes, now they have tried to turn around the entire operations, turning the company not only profitable, but high growth margin trajectory is what they are looking at now.
Well, that was about V-Mart, but I just want to say Nikkei had rebounded 10%, and US futures had also seen some bit of rebound, although they had come off the highs. But the fact that despite global cues today, we ended below that 24,000. That's something that we should take note of. But of course, tomorrow, let's see what happens. If we see a good recovery in the US market overnight, plus we also have the RBI policy later this week, right? The meeting started today. It's a 3-day MPC meeting, so third day, which is Thursday, we will be looking at the outcome of the RBI policy as well. So lots to digest going forward. Economy related stuff in focus, and of course how the global market scenario pans out tomorrow morning also will be in focus. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. From me and Yatin, have a great evening, and come back and join us again tomorrow morning at 9 AM on Opening Bell. Thank you.